Investors believe that real estate companies present a decadal opportunity for investing. Prices may or may not go up, but volumes for a lot of large developed players will actually be substantially better over the course of the next few days. But remember, the sector per se has actually gone a sea change post demonetization, GST, Benami Properties Act, RERA, and lots more. So let's ask Anuj Puri, somebody who tracks this space very, very closely, about what the next year or the next few years could look like. Anuj, good morning. Thanks so much for joining in. Now, I know we've had some conversations like this in the past. You've had some conversations like this with a lot of people in the past. But as we draw 2017 to a close, it's important to take stock of what the year taught us. And to my mind, one thing that stood out based on our conversations with most people is that the next few years will belong to the clean, large developers to whom societies or landowners will want to give their property in order to get it developed on time, to not face the backlash which is legal or from the consumers. Is that a fair assessment of how the property sector is looking like moving towards over the course of the next few years?
So thank you for having me here, Neeraj. It's a delight to be on your show.
Thank you.
I clearly see is that 2017 was a year when we had a lot of impact on real estate, both negative and positive. Negative in the sense that demonetization, GST, RERA, Benami Property Act brought in a huge amount of confusion in the system. But good, in fact, is because we see a huge amount of consolidation that is happened in 2017. I think 2018 will again see a year of consolidation. I believe that 50 to 60% of the developers who are functional today would not be functional over the next 18 to 24 months. You said is that there will be consolidation of large, clean developers, and landowners will give their properties to those developers. I completely agree, except that I do not believe that large is a word that one would use, because there are several large developers who did not perform well, and we've seen many of them in the NCR region. So I would say is you're going to see consolidation and survival of the developers who are very customer focused, financial prudence, governance, transparency, and that's where not only the landowners will give their land to them, but I do feel is many developers who believe that under the new regime of RERA, they will not be able to function, they will give their land. Equally, I feel there will be a number of new developers who will get into real estate, which is fantastic, because we're seeing across the board a number of corporates who had traditionally shied away from real estate. For example, whether it's Birlas or Bharti or Hero or TVS in South, many of them have traditionally shied away from real estate, are now becoming real estate developers and saying is, this is going to become a sector, this is going to become an industry. We're used to running an industry, and we would now like to play in this industry. So I do feel is that 2017 has been a year of huge learning, but those learnings will continue in 2018. And on the other side of 2018, when we emerge, you're going to see this sector a lot more cleaner, consolidated, a lot more prudence, both financial and with customer focus.
Yeah, so pray tell me, Anuj, and I want to come to volumes and pricing both, but I just want to take a leaf out of your earlier answer. When we talk about large corporate groups coming into real estate, what are they doing? Are they seeking established developers to partner them? Because frankly, these large groups may not necessarily have knowledge of how the sector performs. Or are they actually going out on their own? Or are they seeking some construction firms to do the building for them because they will put in the money and be the landowners? What is it that companies are doing?
So very interesting question, Neeraj. What they are doing is they are going to the existing developers and saying, we are happy to take your land either on a joint venture or a joint development, or even for that matter, development management. But we want you to get in all the approvals. We have no capability to get the approvals in the current regime. We want all the approvals to be done by you. We will then come in on the design, on the construction, which usually they outsource it to one of the big contracting companies, and we will do the marketing. So that is what they are focusing on, not necessarily on getting in the approvals for the land, and certainly not on the contracting bit.
Okay, interesting. Now, the 2 points that most people are debating as to what happens over the course of 2018, probably the next 2 or 3 years. First is volume, second is pricing. Do you, firstly, see any kind of pricing uptick?
Correct.
Into the major pockets? I know India is a very diverse country, so different pockets will have different pricing regimes, but by and large, could there be a pricing uptick or will there be stability?
So Neeraj, I see stability. Certainly the first 2 or 3 quarters of 2018 as a calendar year, I do not see the price rise happening. I do see at some stage towards the end of 2018 a price rise, and there are 2 reasons for that. One is that the supply has dramatically come down, absolutely dramatically come down over the last few quarters, where we were seeing at the beginning of 2015 about 60,000 units every quarter that were being launched. Today we're seeing less than 20,000 units every quarter being launched. So it is really 1/3 of what it was in 2015. And that's largely attributable to RERA, because RERA is very clear that you cannot come in and do a pre-launch and you cannot sell properties until you've got all the approvals. So we have seen a reduction. The second is we have not yet seen the demand prop up in the premium luxury, but we've seen a huge prop up in demand on the affordable segment. Demand was always there in affordable segment. It was just that the developers were not delivering affordable housing. What they have done is, interestingly, is not delivering now affordable housing on the periphery of the city. They are delivering affordable housing within the city, but they have made the apartments very compact. So what is selling today, and hence the volumes have started to go up, is 1 bedroom, 1.5 bedroom, 2 bedrooms, which the developers were not making before. Today, these developers are 450 square feet to 600 square feet of carpet area. Beautiful, just like what you will get it in Hong Kong or Japan or Singapore. Compact apartments are not necessarily they've reduced the price per square foot, but the overall ticket price is reduced, as a result of which we're seeing that the volumes on the demand have gone up. So on one hand, your supplies come down. On other hand, your demand, because of affordable whatever is being delivered, is getting consumed. At some stage in 2018, you're going to see is that the demand will be ahead of the supply, and that's when you're going to start to see the price rise happen.
Wow. Well, let's wait and watch. Well, let's see if it happens in the early stages of the second half or the latter stages, Anuj. But it's a pertinent point. My final question to you, Anuj, and I'm tying in an equity markets perspective here. I know you're not an equity market investor per se, but just trying to figure out what model do you think will succeed. As I see it, there is a model that Godrej Properties is now following, wherein they have their expertise of development. They are getting into a contract with landowners, so to say, telling them, you give us the land and we'll develop it. But the ROE on such a model for a Godrej Properties is substantially higher than it would be for another company which is the owner of land, because you invest so much higher in land and then go out and develop it. What do you think a model for an established real estate name would be? Because there are these few names which have the brand bandwidth to attract landowners. Do you think that that could be a model that will succeed more going ahead?
So Dheeraj, 2 points to that. One, I certainly think is that you're not going to see many land outright sale, because you're absolutely correct that the ROE is not as efficient if a corporate buys the land and starts to develop. So you're going to see more joint ventures, where the incoming developer will say to the existing developer that I will create this building, and as we sell, we will share the sale proceeds. Or they will do a joint development, in which case an area share is given to the existing developer. Or exactly what you said is that Godrej is doing development management, which is a pure revenue. It can vary between 12 to 14% of the sales, where they will go to the existing developer and say, we're going to bring in our expertise, we're going to bring in our marketing, our sales, we will deliver, we have a great brand, hopefully we'll deliver even at a more higher premium than what you may be able to deliver, and we will not invest anything other than our own manpower, expertise, sales, and we'll take a 12 to 14%. But Neeraj, this will only happen with the corporates who have a great name. Those who are entering the field today may not be able to get those deals. I think is that needs to be proven, like Godrej has been able to do it, Mahindra has been able to do it, Tata Housing has been able to do it. Many others who are getting into this fray will need to first deliver, perhaps more on joint venture, joint development, before they graduate onto a very interesting model called as the development management, where the ROE is fantastic.
Okay. Anuj, pleasure chatting with you, fairly insightful. Thank you so much for taking the time out, and have a great 2018. You are as much a startup that we at Bloomberg Quint are, so wish you a great 2018.
Likewise to you as well, Neeraj.
Thank you so much, Anuj.